Shalom. First and foremost, I'd like to give all praises and glory and honor to Yahweh, Ba'ashem, Yahweh Shai, Ba'ashem, Wakarkadash. Double honors to the elders and apostles of Great Millstone, preaching His word truthfully and sincerely. And shalom to the Akim, scattered to the four corners of the globe, preaching the word truthfully and sincerely. And double honors to the elders, and shalom to the Akim, scattered through the four corners of the globe, preaching the word truthfully and sincerely. I say shalom to you Akim out there. And this is a sit-down lesson that I want to bring out, and this is from earlier today from WallStreetJournal.com. And this regards to U.S. markets. Finished lower once again. And this is the second day of the first week of opening of the markets in the year 2023. And it reads, the U.S. stocks slip as investors worry carrying into 2023. The S&P 500 dropped 19% last year, its biggest pullback since 2008. And this is an index performance, as you see the data statistics right there. And the second one, the S&P 500, as you see it from a up and down scale, dropped down to 19%. The biggest pullback and biggest losses since 2008. And the Dow Jones and the NASDAQ as well too. All the three categories of the index performance data statistics shows from December the 29th all the way to December the 3rd of 2023. And it says the U.S. stocks slipped today to kick off the new year, pulled lower by investors' favorites such as Tesla and Apple. I believe when I did a video on this yesterday about Tesla, they had decreased once again. So this is the second day Tesla failed with their stocks as well too, along with Apple. Apple electronic company, along with Tesla. And it says the S&P 500 fails 15.36% or 0.4% to 3,824.14%. The index dropped 19% from last year. It's the biggest decline since 2008. The year Lehman Brothers collapse, the tech focus NASDAQ composite dropped 79.50% or 0.8% to 1,386.96, and the Dow Jones Industrial Average slip, which is negative 10.88% or less than 0.1% to 136.37 points. All three index open session seasons high before quickly giving up those gains. So they had early gains in the day as the hours progresses on before the closing of the markets after 3 o'clock Eastern Standard Time, which is in New York City, the New York Stock Exchange. It says 6 of the S&P 500s and 11 sectors fell, with energy leading the decliners and communication service and financial sectors amongst the brightest spots. It says investors are worried of what 2023 may bring inflation, and the length and central banks are willing to go tame it will remain a focus. It says the Federal Reserve has signaled plans to lift interest rates through the spring, which is a couple of months away. It says although some traders expecting that the U.S. could slip into a recession and are better that policies makers will pivot to cutting rates Investors are also assessing what China's border reopening and wider shifting from its previous strict stance on you know what 19, which means for markets. Markets have been vacillating about getting optimistic about inflation, China, and getting worried about growth, said Altaf Kasuma, head of investment strategists research for Europe, the Middle East, and Africa as the State Group Global Advisors. We are going to have this pattern of a few days and few down days. This is likely to spin more volatile for the start of the year, he said. Investors might also be rebalance their portfolios towards stocks in the start of the year and after Treasury suffers a bruising 2022. Amongst those investing stocks was a notable move dropping stocks. Tesla was a notable move in dropping 1508 or 12.2% to 108.110. It's the largest percentage decrease since September 8th of 2020, according to the Dow Jones market data. The electric vehicle market fell short of its 2020 delivered target. Tesla stock suffered its worst year ever since 2022, declining 65%. Right, because the Tesla company of their markets has been down for the past 2 days now. So this has been their worst of 65% decline. Apple shares declined 4.86% or 3.7% to 1.25, pulling the iPhone maker market value below 2%. Below 2 trillion for the first time since March of 2021, according to the Dow Jones market data. The AMC Entertainment, while the slip 14% or 3.4% to 3.93% after rival Semi-World Group said it was in talks with a theater chain regards the sales of its cinema assets. The AMC has last month that it held discussions regarding the potential strategic acquisition of theaters from the bankrupt Cinema World, if I pronounced that right. It says, as 2023 gets underway, investors and traders are assessing the outlook for inflation and monetary policies. It says, in bond yields, the yield of the benchmark 2-year Treasury note ticks down to 3.791% from 3.826% Friday on signs of cooling inflation. Yields and price inversely it says the German Federal Statistical Official said Tuesday that the country's inflation rate is expected to be 8.6% in December, falling from recent months. The agency also said consumer prices are expected to drop by 0.8% from November. This is a boosting hope that the global campaign for central banks to raise short-term interest rate might be winding down. Some investors believe that persisting and sticky inflation will pressure the U.S. central banks to sustain interest rates at an elevated level for longer than expected. And this is an environment where the Fed is looking at the risk of ending this tightening policy set too quickly, says Eric Freeman, Chief Investor Officer of the Asset Management Group at U.S. Banks. We do think that the Fed is going to remain error on the side of hawkish and opposing to dovish. Market doesn't believe that right now and has to be recline at some point this year. Tuesday's sessions marked the one-year anniversary of the S&P 500 last record closed the longest streak without a new record since a 285 stretch ending in July 2016. According to the Dow Jones market, the index is down about 20% from past year. The Wall Street Dollar Index, which tracks the greenback against the baskets of currency, gained 0.7%. The cause of the dollar start of the year climb wasn't clear, said Derek Halpenny, head of the research of global markets in the European Union region at Japan's MUFG Bank. It says spectators, traders may be betting that the dollar will strengthen against the euro in the coming months, he said. After the euro gain at the end of the last year, in the final 3 months of 2022, the euro is notched its largest quarterly percentage gains greenback since 2010. The energy markets bench cooled. The international benchmark for oil prices fell 4.4 to 82.10 a barrel, steepest one-day declining since September. Analysts blame a strengthening dollar and concerns that business may not stock up level investors in anticipation of a recession. Overseas, the Penn Credential stock Europe climbed 600 points, which is 1.2%. China's Shanghai Composite rose 0.9%, and the Hong Kong Hang Seng rallied 1.8%. South Korea's Kospi edged down 0.3%, and Japanese markets were closed for a holiday. So the second day of this, the first week of January 2023, as we entering a new year with the stocks and markets opening once again for another loss for the second day in the first week of 2023 of the new year of the markets opening of the Wall Street. So we're gonna see this trend continues, having early positive gains, and later on in the day it declines. So once again, another indication of modern day Babylon is falling economic wise and is gonna continue to sink and shit. But as of right now, so you have the markets down. The S&P 500 dropped 19% last year, its biggest pullback since 2008. That's the Dow Jones Industrial negative 10.18 points in the negatives. And the S&P 500 and the NASDAQ Composite, all three categories of markets slipped today, as Tesla and Apple, their stocks dropped as well too. While you still have a concern of a recession, then a concern of the Federal Reserves, you're gonna continue increasing the interest rates as well too. Because as I mentioned before, the stocks and markets react to what's going on globally, economically, data statistic wise, or what type of a strategy or an announcement of the Federal Reserve they're gonna make, So the markets kind of react off of that. So as of right now, all three categories of the markets crashed once again for the second day in the first week in the new year 2023. So with that, I hope this lesson was edifying of me reading this whole news article that was published earlier today from WallStreetJournal.com as of January 3rd, 2023 at 8:49 p.m. Central Standard Time. So with that, I would like to give all praises and glory and honor to Yahweh, Ba'ashem, Yahweh Shai, Ba'ashem, Akarkadash. Double honors to the elders for preaching this word truthfully and sincerely. And shalom to the Akim scattered through four corners of the globe, preaching the word truthfully and sincerely. And until next time, I will say shalom and a ball.